Welcome to Fitzfactor, the show where you learn how to master the stock market with Dan Fitzpatrick, the stock market mentor. Dan is a savvy trader. He's featured regularly on Fox Business, CNBC, Investors Business Daily, and SiriusXM Radio. In this podcast, Dan shares his insights on trading, life, and attaining long-term success in the market.
Dan, I'm really interested to learn your process when it comes to trading through a binary event. You know, whether it's an election, an earnings report, or maybe an economic data point that the market cares deeply about. What's your strategy for going into an event with an unknown outcome?
Oh, it's a good question. Going into an event with an unknown conclusion. If I don't have a position at all, then I'm not going to take a position going into a binary event with an unknown conclusion, because another term for that is gambling. Like, I've got money and I like to make it. The more the merrier. And so if I have money and I see this binary event, like the election, for example, we're doing this on Monday before the election. If I have money and I'd like to put it to work, but I see this election coming up the next day or 2 days from now or whatever, and that binary event is the market could really go up or really go down. Like if it's like, oh, it's not going to move too much, well, then why am I even thinking about putting money to work then? It doesn't make sense. But if the market or a stock or whatever you want to call it could go up, could go down, and I don't have any edge at all, then I'm totally gambling. And I don't like to do that. I don't like to gamble. So I wouldn't do anything in that case. What I would be doing now is I'd be opportunistic and saying, okay, we've got a binary event. I don't know which way this is going to go. So this is the thing. I'm going to wait until I see which way it has gone, not where I think it's going to go, but which way it has gone. This big, like if the market happens to make this big move, I don't think it will. But if the market happens to make a big move one way or another, then I'm going to want to see that, and I want to watch it, and I want to wait until that first move has run its course. And that may be in 5 minutes. It may be in 5 days or 5 weeks. I don't know what the time period is, but I'm waiting to see. So if I don't have any money going into a binary event like this, then I'm going to wait and trade on the other side. So now I'm not gambling. I'm speculating based on what I see. Does that make sense, Scott?
Yeah, absolutely, Dan. Do you have any rules when it comes to a profit cushion? Say somebody's in the market already and they're coming up to an unknown event. Again, maybe it's an election, an earnings report, macroeconomic data point, whatever. Do you have a strategy for being in the market and coming into an event?
One of the things that I'll do, let's say I have a position in NVIDIA. Maybe it's closer. They report on the 20th. And so let's say it's the 19th. And I'm going like, okay, I got a nice position in the stock. I think I'm going to hold it. Okay, well, will I really? Because right now I see the implied move. I'm using this as a hypothetical because this is only the 4th and NVIDIA reports on the 20th. But if I'm looking at the November 22nd options, I see an implied move, implied by the options market. Like if you're buying an at the money straddle, that implied move is $18. And so that would give me, like, let's see, from where it is right now, the stock can move down $18. And again, this is several days, a couple weeks from now. So this isn't exactly right, but it proves it illustrates the point. The implied move is that the stock can move down this much. So if I have any kind of a position in here, then I'm risking taking a loss. Like let's say I bought here.
If you're getting value from this podcast, click the subscribe button and sign up for Dan's free daily videos at stockmarketmentor.com.
Let's say I bought here. So I got a nice profit in this stock right now, almost 7%. Well, if the implied move, again, we'll just say earnings are tomorrow or something. And if the options market is implying that the stock could fall as much as $18, down to 120, then I risk giving back all of my profits and then taking a huge loss, at least for me, a huge loss on this trade, over 6%, just because I decided, oh, I'm profitable, I'm going to hang on to that position. And then on the other hand, the stock could go up $18. And so that takes us up to to what? About 155 or so. So this is a big wide range that I'm looking at where the stock could go. It'd be nice if it did this. Yay, you know, I wished I'd owned more stock. But I'm thinking more going into a binary event like earnings. I'm thinking more about what's the downside for me. And so that's one way that I would look at it is what's the option market telling me? What's the option market anticipating, like on the downside, the worst case scenario is for the stock. And if the worst case scenario takes my profitable trade into a losing position, that doesn't really work for me. Now, it doesn't mean that maybe I couldn't take some profits and then lower my net cost basis, meaning taking the profits that I have made and then applying them to the stock that's left. If the lowered cost basis is below this $18 move, then maybe that's something that you can do. But the goal is, if I'm just using options and implied move in the options market, my goal is to take the risk out of the equation. If the equation is options market is typically correct, not always, but typically it is. And so I want to say like, okay, if the options market's correct in the worst case scenario, if the worst case scenario happens, and so then I wished I had sold all of it, hey, I'll be happy and say, well, at least I sold some of it. And so that's how I would look at that kind of thing. Again, you're asking about going into a binary event, a big event that could take the stock one way or another in a meaningful way. I wouldn't really look in that case at, say, moving averages like, oh, well, if it does go down, it'll bounce at the 50-day moving average. Maybe it will, but maybe it won't. And so I place less reliance on that kind of stuff as far as deciding whether I want to keep a position open or not, because it's just too much risk. The best trade in my mind is the trade that you don't take.
Thanks for listening to Fitzfactor with Dan Fitzpatrick. If you like this, then you'll love Dan's premium service at stockmarketmentor.com, where you can learn how to trade stocks, options, and cryptocurrencies. Click the link below and get access to real-time trading alerts, a community of traders just like you, and live training sessions each week. Get the trading edge that you need at stockmarketmentor.com.